Hi, this is Judah Levine, Research Lead at Freightos, and here's what happened this month in freight. Since the story of costs and often operations in logistics is really a story of swings in supply and demand, we'll start by looking at some graphs from our Freightos Baltic Index, which is an index of containerized ocean freight, rates for the price to ship a 40-foot container on different lanes, which is a good reflection of supply and demand for ocean freight. Here we can see that China to US West Coast rates went unchanged this month and have been stable but very high at about $3,870 per FEU since mid-September. But as peak season is normally tapered off by the end of November, for context these rates are 191%, nearly triple last year's. A surge of ocean freight that started in June pushed rates up almost uninterrupted from June until September by 135%, from about $1,650 to $3,850. China's US rates haven't gotten any higher since mid-September, probably due to pressure from Chinese regulators, trying to keep rates from climbing any more. But they're staying so elevated due to the continued very strong demand for ocean freight coming into the US. And this surge is causing congestion and delays at key US ports like LA and Long Beach, which is contributing to a severe shortage of empty containers back in Asian origin ports and elsewhere. And this has led to U.S. Federal Maritime Commission officially opening an investigation this week into whether carriers are prioritizing empty containers over U.S. exports on Asia-bound ships and to the detention and other charges that they're applying at overwhelmed ports. And as containers are being prioritized to the high rates on Asia-US lanes, the resulting equipment shortage from Asia to Europe is helping drive rates up there, as prices climbed 10% this week at the end of November, making a 27% increase in November overall. So in this unusual year, peak season has continued through November, with most observers expecting demand to stay strong up to Chinese New Year in February. So what was the demand that's driving all of these prices? One big shift or change this year is from spending on services to goods, especially home office, home furnishing, or sports and recreation goods, as well as changes in food consumption patterns. So you just have more of these items building inventories than in a typical year. PPE is still certainly a factor as well. And this shift to e-commerce means not just more things moving quickly, but building up of new inventories that weren't established before. In addition, inventory levels that had run down over the course of the pandemic are being refilled now and restocking, which could extend for a few months. So some of these factors are seasonal, and others may be shifts in consumption patterns that are not as easily predictable of how long it will take for them to stabilize, because so much of this is unprecedented. So if volumes stay at peak levels, of course rates will stay high or possibly climb. If we look at air cargo in comparison to ocean rates, we saw even more volatility this year. So about 50% of air cargo normally travels by passenger jet. So as passenger travel was severely reduced and there was a spike in demand for urgent PPE earlier in the year, air rates spiked in the spring, getting more than 400% higher than they were at the start of the year by May, and then stabilizing in the summer as the PPE supply chain stabilized. But we can see here that rates have stayed very elevated simply because of that lack of capacity from passenger jets, which has continued. So now as we are in the mid of peak season, and demand for that limited capacity is growing again, we see rates climbing again, about 30 or 40% since October, which are maybe 50 to 60% higher than a typical peak season rate. And this again is driven by capacity shortage, by some PPE, and by consumer tech launches for the holidays like the new iPhone ahead of the holiday season, and other seasonal peak season goods that are competing for this limited space. The rates should subside toward the end of the year. Of course, the distribution of the COVID vaccine is the next big event in air cargo, which will cause volatility when it arrives. That's it for this month's update. Thanks for watching, and remember to follow Freightos on LinkedIn for all the latest updates, or sign up for our full weekly update and free access to FBX daily ocean rates at fbx.freightos.com.